Guaranty Trust Bank just printed 866 billion naira in profit after tax and a record 12 naira 76 kobo dividend per share. And on the surface, everything looks strong. But here's what most investors are missing. Behind the headlines, the Central Bank of Nigeria declared banking recapitalization officially complete with 4.65 trillion naira raised, about 70% of that coming from local investors. Four banks makes the deadline, and regulators just hit five brokers with about 291 million naira in fines. So we're breaking down what Guaranty Trust Bank earnings really signal for the entire banking sector, as the entire banking sector obviously is being repriced. So the government also this week announcing they're going ahead with a multi-billion dollar borrowing. And so we'll be asking, what does this really mean for debt sustainability? So the real question isn't what banks have earned, is what they are able to pay going forward. In this episode, I'll walk you through my dividend projections for top Nigerian banks and why some of them may already be fully priced. I'm delighted to be joined by Andrew Esene. Andrew is head investment at FCSL Asset Management. Andrew, welcome to the Edge.
Thanks for having me, Dr. Okafor. Great to be here.
Yeah, Andrew, welcome. And for everyone, welcome to the Edge. This is a place to be. This is the channel to be. We are here every weekend dissecting the Nigerian financial markets and the global markets as it were. We'll talk about what's going on, what has transpired in the financial market over the past week, and we give insight, we give context for investors so they can take actionable decisions. So, Andrew, welcome again, and everyone, thanks for joining us. If you are new to this channel, please like this video, hit the subscribe button, and you'll be able to see all our episodes once they are uploaded. So, Andrew, let's start with this Guaranty Trust Bank's financial year 2025 reports. So, Guaranty Trust Bank dropped the full year auditor report right in the middle of the week, 1.2 trillion naira profit before tax and 886 billion naira after tax. 12 naira 76 kobo dividend per share, interest income up by about 23.2%, fees up by another 26%. What do you make of the GT Bank's performance for 2025?
Thanks, Doctor, once again. The performance was really unexpected in terms of the growth that we saw in the top and middle lines. Like as you mentioned, there was a 1.23 trillion naira in PBT, and then though there was a drop in the profit after tax from about 1 trillion to 865 billion, but that was likely due to a higher tax line of about 40%. So that is understandable. Apart from the top line growth that we saw, I think what really stands out for the result is the quality of the earnings growth. And then despite the fact that we saw a lower profit after tax, the company increased its dividend per share by over 50% from 8 naira 3 kobo to about 12 naira 76 kobo. So although part of this had already been priced in, the stock was selling at over 100 naira. And so when this was released, though there was a limit up movement about 10% on the day of the announce of the result or day of the result announcement, but just a banking franchise, but one trust holding company, and it has asset management, payments, and fintech all in its service offerings. So it's not just a banking company, banking organization anymore. It's a lot more than that, and we saw that translate into its earnings. So the result was really welcome, and the dividend
So
was more than what the market was expecting.
yeah, Andrew, I think we lost you momentarily there. If you
Okay.
may please, yeah, come back with your thoughts.
Okay, so I was saying that the market really welcomed the release of the results from GTCO. And
Okay.
as I mentioned, it's not just a banking franchise anymore. It's a holding company that has payments, asset management, and fintech within the group, as subsidiary companies. And so
Yeah.
we did see that feature prominently in its results, although the banking business still controls the majority of the business, but the the impact of the other businesses, though small but growing, was also seen in the results. And the dividend announcement of 12.76 kobo was a positive surprise to the market. Week on week, the stock gained 5.1%, but on the day of the announcement, the stock did gain about 10% in the market. So the market welcomed the results of GTCO and also the dividend announcement as well.
Oh yeah. So I think we saw some rotation and profit taking earlier in the weekend, some banking, consumer goods, and some premium names earlier in the week. While oil and gas and industrial stocks held firm. Did the Guaranty Trust Bank results, did it spark any immediate re-rating in the sector, like across other, banking names? Did you see any, movement in those names that could signal expectation following the release of Guaranty Trust Bank's results?
Yes, we saw that. Zenith Bank is there's what we call pair trading in the market, where a
Yeah, that's
particular stock trades and trails the performance
mhm.
of another particular stock. So we saw, I think Zenith Bank gained about 9% a day after the release of the GTCO dividends, and so the expectation is that Zenith Bank will also want to um, post a positive surprise to investors in the market, given that they are largely seen as peers, apart from the
Yeah.
premium that GTCO trades at. But they are largely seen as peers in the industry. And so we did see some investors look to position in Zenith Bank with the hope that shortly after the release of the dividend of GTCO, Zenith Bank will do the same. And then we'll hopefully see that positive surprise. And as you said, there was a tactical rotation out of the banking space because a lot of this had been priced in. And then the expectation was that with the recapitalization and increased outstanding shares, the banks may not be able to significantly beat what they posted as dividends last year. But GTCO has,
Surpass that now.
surpassed that expectation. So riding on that, investors did seek to position in the likes of Zenith Bank to benefit from the dividend that would be declared by Zenith Bank, and that is expected in the market anytime soon.
Yeah, talking about premium, Andrew. So GT's stock with the valuation trajectory kind of suggests that market is assigning a premium. So what exactly is being priced in? Is it the earnings durability, corporate governance, or just optionality beyond banking? What exactly is this premium that the whole market seems to assign to GT?
You mentioned it. It is both earnings durability and also the corporate governance posture of
Okay.
the bank. So with a lot of, well, not a lot, with some of the listed companies on the NGX, you can tie them to particular individuals. So if you say members of the Dangote group, you can tie them to Dangote. You can tie
Okay.
um, Zenith Bank to the founder,
Mhm.
Jim Ovia, but you cannot tie GT to a particular individual because of the broad nature of its shareholders. And then we have a lot of foreign portfolio investors investing in the bank. So in terms of corporate governance, GTCO enjoys that corporate governance premium, not to talk about the quality of its earnings, and then its ability to retain and even surpass investor expectations over time. Even the dividend for full year 2024 at 7 naira 3 kobo, if you add the interim to that, it becomes 8 naira 3 kobo, was even
Yeah.
an improvement, a significant improvement over the previous year. And so those positive dividend surprises, and then the fact that it cannot be tied to a specific individual, it enjoys that premium that, in terms of decision making and the way the bank is run, there is a lot more. The corporate governance is stronger compared to its peers.
Other names.
You can tie First Holdco to the new significant shareholder, Mr.
Yeah.
Femi Otedola, but you cannot tie GTCO to an individual. So the key man risk is not um, significant, it's not strong when it comes to GTCO as opposed to its peers.
Okay, that's interesting because I think a lot of people need to understand that as well. So you touched on, I mean, we already talked about that interest income coming in at about 1.2, I mean, 1.62 trillion naira, fees income jumping to about 279 billion naira. That's about 26% growth. So it shows very strong operating momentum. However, the profit after tax, as you touched on, came in lower year on year, obviously due to the absence of that one-off fair value gains that we saw in 2024. I think higher withholding tax on investment securities could also be one of the reasons. So my question is, how sustainable do you see the underlying earnings growing into 2026, especially with the completion of the banking recapitalization? How sustainable do you think, for instance, GT earnings? And do you think that there is still room for growth for GT, from where it's currently priced?
Okay, if we look at it from the aspect of the high interest rate environment,
Hmm.
before now, the expectation was that the Monetary Policy Committee would taper down on rates, but given the energy crisis that we are seeing and inflationary pressures, the going forward, the MPC would likely hold rates,
Yeah.
just to be able to understand where these pressures will go. Given that elevated high interest rate environment, the GTCO should be able to sustain, its net interest margins, especially the interest income from its from the assets created. Also, given that we're just coming out of the recapitalization, and as you mentioned, about 4.65 trillion, was raised by the banks
Yeah.
to recapitalize their position. So the deployment of those additional funds in this high interest rate environment would lead to, we would see that report positively in their earnings, and over time they will be able to. So we should see higher numbers coming in from their interest income. And on the non-interest income side, so where we have payments, investment income, fintech, their fees, there might be some moderation,
Okay.
at that space, because although for the investment income side, yields are still high and they may still remain that way for some time. So on the fees and payment side, there may be some moderation, but we expect that on the interest income line, that will continue to grow, because the environment is the interest rate in the environment is elevated, and then they have more funds to deploy in that space. So
Okay.
it should be durable. Yeah.
Okay. So they posted that 12 naira 76 kobo dividend per share, which is one of the highest in the industry. Payment deadlines approaching. I think the register closes mid-April. So our current share prices, this obviously implies an attractive trailing yield. How do you think investors should view GT now? Should they see it as a high dividend defensive play in a bull market? Or is there still upside, which is really what I'm trying to get from? Is there still some form of upside from GT, or with the dividend, has everything been fully priced in?
Um, so I would say there is both plays are still present in GT. So for
Okay.
the short term, investors can position, to get the
The
dividend
dividend.
payment in the short term, and the yield, from the dividend payment is still around 9 to 10%, which is still quite attractive for
Hmm.
a 60-day play, so to say.
Yeah.
So that is still there for the short term, and then in the medium to long term, it is still um, a bank that will continue to churn out very good results, and those results should filter into its pricing. So on both plays, whether they want to invest for the short term just to benefit from the dividend, or they want to go long on the stock, both plays are still present in GTCO, I would say.
Okay. We've seen how strong the interest income comes into play with their earnings. If we stress test the current valuation under low interest rate scenarios, what do you think? Do you think their valuation will still hold in terms of the pricing?
So what will be impacted would be, like you said, their interest income, but the the premium that the bank trades at, I don't think it would be impacted, because at the same time, this would affect all its peers if we see a lower interest rate environment. So I'm putting all its peers on the same plane.
Yeah.
GTCO will still stand out. And it's the bank has been touted for its cost efficiency. Which makes it one of the most profitable banks. Its return on equity, and then so I think it will majorly be a return on equity and a cost of equity and a cost to income play for the bank. So it will still post very attractive return on equity, and the efficiency that we've seen over the years will still come into play. And so, in terms of valuations, whether we are having evaluation, so there'll be a pressure to net interest income, but
Yeah.
for other income streams, and then the valuation over time, it will still sustain its current valuations.
Okay, yeah. As you, I'm just trying to share this with you now on the screen so you can see. So I did some analysis to look at where we expect top banks where their projected dividend per share will come in for 2025. So Zenith, I think their 2024 dividend per share was about 5 naira. So I'm projecting a 20% growth to about 6 naira. Access Bank was about 2 naira 5 kobo. I'm expecting about 46% jump to about 3 naira. We're already seeing GT at 12 naira 76 kobo. That was about 59% growth. First Bank, right? So I'm thinking that First Bank will pay about 1 naira 15 kobo. That's about 15% growth in dividend. UBA, I expect UBA to be flat at 5 naira last year and then 5 naira for 2025. Fidelity, Fidelity 2 naira last year, I'm thinking, projecting about 2 naira 50 kobo. That's about 25% growth. Stanbic came in at 4 naira 2024. I'm projecting 2025 will be 4 naira 75 kobo, which is about 19 percent. Wema, my initial projection was about uh, 2 naira, but obviously they were only able to do about 25%. That's about, so they came in at 1 naira 25 kobo. Sterling, the last year, 1 naira 80 kobo. I'm expecting about 33% growth there to about 2 naira 40 kobo. And EcoBank 3 naira to about 3 naira 75 kobo for 2025. I'm projecting a 25% growth there. Andrew, what do you think?
Well, in terms of dividend projections,
Yes.
it's largely subjective, to
Yeah, but
uh,
see what I
the
did.
board and regulatory approvals.
I looked at their 9 month figure. Then I did some simulation using GT's earnings, just kind of simulate to see where these guys are going to come in at. But I understand and
Yeah,
I
yeah,
appreciate the fact that obviously the shareholders will still have to approve whatever amount that is going to be declared as dividend.
yeah, yeah. So for a few of them, maybe for Access, Access has not been known to, and they have a good reason for it in terms of dividend rewards. The
Mm-hmm.
focus has been their expansion, and so um, a lot of the retained profits is plowed back into their expansions, and hopefully we would see the bank settle down to consolidate the acquisitions that have been made, and then we begin to see the impact of the synergy and then reward to investors. So a 2 naira 50 kobo dividend, it's possible, but I would say the market is not banking on a significant on a positive surprise from Access Bank. That would indeed be a positive surprise. For First Bank, First Holdco, I think you projected
Yeah,
um, one
one
naira
naira 15
50.
kobo.
Okay, 1 naira 15 kobo. Yeah, so that would not be far from what they did last. That would be expected. Although they did write back, or they did write off about 718 billion naira from their books.
Yes.
So that would also impact the dividend
I
decision
think the
they
market
would
would
make.
view that as positive if they're able to just, with the amount they wrote off, if they're able to grow that dividend per share even by 15%, market should see that as some form of positive coming from what the bank
Yeah,
has gone through.
yeah, and at the last, I think one of their investor forum uh, for analysts and shareholders, they did mention that the current chairman did mention that the bank would look to pay higher dividend, so to say. He said it in a very funny way, but that was at the end of the summary of what he was saying was that the bank should
Okay.
be looking to pay higher dividends going forward.
Okay. All right. So, Andre, away from the GTs and my dividend projection, let's look at the broader market now, especially still staying on the banking sector, though, because the central bank announced the completion of the banking recapitalization that it started over 2 years ago. So we've seen that about 33 out of 37 banks successfully met the new capital requirement, raising about 4.65 trillion, 70% of that from local investors. So walk us through this milestone, if you may, and what it means for the Nigerian banking sector as a whole.
Well, it's largely positive on two counts. So
Yeah.
the CBN governor has come out to say that the recapitalization was largely successful, and
Mm-hmm.
for the four banks that we are still awaiting the CBN pronouncement on their status, we do understand that these are banks that a few of them taken over by the central bank, and a couple of them still under some M&A, but CBN supported M&A process. So we understand why, and that is that. So the fact that the other 33 banks were able to scale the recapitalization deadline, and meet the recapitalization plans is a welcome development. And what it largely means for us locally is that we have stronger banks, with more funds, more capital to deploy in terms of uh, for lending. They can support large ticket transactions. They can compete globally, and then there's a buffer even when there is significant economic stress. We know that the banks are well positioned, to some extent to absorb that stress. And then this is all in line with the president's target of a $1 trillion
Trillion.
economy. You need
Yeah.
financial institutions that will be able to
Support
support
that.
that goal. So it's largely positive, and the expectation is that it will support large ticket transactions, infrastructure, and largely economic growth. So it's a positive development.
Okay, so with I think the banks are Union Bank, Polaris, Keystone, and Unity Bank. They missed the deadlines. What is the most likely outcome for these four banks, and how should investors or depositors view the situation?
I think for investors, it should largely be safe. We know that Unity Bank is in talks with Polaris Bank for a merger, and the CBN
Okay.
is supporting that process. So
Mhm.
investors should not be too concerned about that. Maybe a possible um, dilution of their position, given that the merger would be. But Providence Bank did meet the recapitalization deadline as a regional bank, but Unity is a
Mhm.
national bank, so
Yeah.
that's why it's still in play. Then for Polaris and Keystone, they did get some intervention from the CBN, so we know that that process is in place. So for M&A, we will see M&A talks there, some regulatory intervention, especially with Polaris and Keystone, and then maybe some strategic investor, which will be supported by the CBN in terms of the runway to make maybe a longer runway for them to be able to meet the recapitalization, will now be extended to these particular banks over time. But I don't think investors need to be worried about their investments. These banks are like under the care of
The
the central
central
bank.
bank. But
Yeah.
do we have any idea now about timelines, if there are going to be any form of mergers? Has the CBN come out to give any indication as to when possible mergers for or possible resolution for these four banks, when they expect them, whether to be merged or whether they need to close shop?
Complete the process. Well, I expect that they are working with the CBN on their proposed plans. So the fact that the CBN did not specifically list them out as not meeting the deadline means that they are in talks with them and they are working together to achieve that. So no specific
Oh,
timelines yet, right?
okay.
But
So
they are working with the
yeah, are there any immediate or medium to long-term implication? We will see like stronger lending. I'm talking about post-completion now of this banking recapitalization. Would we see stronger lending to the real sector, potential consolidation? We talked about that, and maybe improve credit rating and maybe big tickets, support for big ticket projects from these banks.
Yeah, that is the expectation, and that is the whole goal of the recapitalization, that we would
Mhm.
see support for infrastructure and then stronger lending, especially to the real sector. That is the
Yeah.
expectation. And I, well, the banks will lend risk adjusted. So they have to weigh the risk of lending to the real sector as against, um, um, putting those funds in investment, in financial assets. So I expect that there will be increased lending to the economy. I mean, 4.65 trillion naira has to be deployed, and so infrastructure, maybe sovereign supported infrastructure
Yeah.
plays, the banks can easily lend to that, and then we may also see the government come up with um, capital raising instruments, issue bonds, that for infrastructure development, which the banks will be very comfortable
Would then
to
be able
to
to
invest
support.
in. Yeah, yeah.
Okay. So now that banks are, they completed this recapitalization, do we expect divergence now between banks that just simply met the regulatory requirements and those who can compound capital efficiently? Do we expect to see that divergence?
Yes, yes. That's a very good question, and it is that has always been the case after post recapitalization, that you have banks that they have the capital adequacy, and then
Mm-hmm.
we see those who can efficiently deploy the
Those capital.
additional capital.
Yeah.
I think that was part of the reasons that gave birth to the well-known term, the fugas. They
Mm-hmm.
went ahead of the pack, in terms
Yeah.
of efficiency and effective asset allocation. So that is also expected. We expect to see that. And that is why, maybe if we go back to GTCO, that is why going forward, the expectation is that riding on the recapitalization, they should be able to post even better numbers going forward, even better than their peers, because the judgment now, the criteria now is not whether they have adequate funds, but if they are able to deploy those funds. So in terms of return on equity for investors, and then manage the associated costs as well, so that on a net shareholders are better off as a result of this recapitalization. So that demarcation, that distinction will be there. We're now looking at the banks to see how efficiently they can deploy this capital.
Well, yeah, I'm also thinking about returns for investors now. So historically, recapitalization strengthens a bank's balance sheet, but doesn't automatically translate into higher returns for investors. Do you think, or what do you think needs to happen operationally for this capital, the capital recently raised by this bank, to actually begin to create value for investors?
Two things. I think the higher appetite for risk in terms of lending, to lending for economy growth. So the banks cannot continue to play safe and invest in
Yeah,
government
just
assets.
invest in fixed income. That's where that's where you
Yeah,
that's why
yeah.
you see most of their, interest income and all that, it's sexy, very high. So I don't think they take enough risk. That's my opinion.
Yeah, true. But at the same time, um, the funds that are being deployed are investor funds, and so they would not um, just take the risk when they are not sure that the economy can support the kind of requests that businesses are making, the loan requests, so to say. So they are justified if they feel that it will be too much risk for them to take. So instead of putting um, investor funds at risk, then it's safer to just park them in government assets. But the expectation is that so we expect to see increased appetite for risk in terms of asset quality, to grow their capacity to actually sift through the risk assets that are being created, so that they invest in quality assets, and then cost discipline. So we expect that part of the deployment of the funds will be um, improved infrastructure, their technology platforms, and all of that technology upgrades. And so
Yeah.
there has to be that cost discipline as well, and increased efficiency for us to see the returns to shareholders.
Right. Interesting. So Andrew, let's talk about the NGS sanctions and market integrity. So big regulatory news coming out of last week. The NGS sanctioned five broker firms. CSL Brokers was fined for about 91 million naira. Cowrie, Meristem, Smardac, and Associated Asset Managers all sanctioned 50 million naira each, and a combined total about 291 million naira over what the regulator described as wash trades, and self-matching, artificial price formation and misleading activity. What does this all mean? And could you provide more context and what this actually mean for the integrity of the market?
Okay, there are speculations about that this involved the trading in a particular stock, but which actually returned about 800% in a month within a 1 month period. So,
Do
but that
we
is
know
not
the name of this stock?
yeah, we will not be able to call the name of the stock, because but for investors, for market players, once
Yeah.
they can track the stock that returned 800% within a month, they'll be able to find that
Okay.
out.
Okay.
So it's been a while since we saw a public disciplinary measures against capital market operators. So
Yeah.
this does send a strong regulatory signal to the market, that there is increased surveillance from the regulators, and that the regulator is watching the activities of capital market operators. So it's a positive signal to the market, even though we do not know the extent of infraction, committed by the different parties. We know the fines that were imposed on them, but what they actually did, we don't know.
Yeah, I think they lumped everything
The
together and said
details,
it's
the details, yes,
self-matching, warp
exactly.
trades, artificial price formation, and misleading activity.
Yeah. So for the short term, there's a reputational issue for the firms that are involved, but for the long term, it shows is to increase confidence in our markets. That infractions will be dealt with by the regulators. So, and it gives investor confidence as well.
So, can one take for granted the integrity of Nigeria's market? And do you think investors will price in? I'm talking about foreign investors now. Do you think they are going to price this in?
So I think we are getting there. We
Okay.
will get to a point where we can say that the market is fully transparent and
Mhm.
all there are no manipulations in the market at this point. A Investors to some extent believe that there are some manipulations in the market when you see how trades are being done, but this comes to to disabuse the minds of investors of that particular notion. So in terms of foreign portfolio investors, pricing in integrity into our market, it is somewhere we are getting to, but we need to see more of this, more of this kind of sanctions for infractions in the market, to further boost investor confidence. We did have a government official, I think in the last administration, said that the stock market was more like a casino, and that gives the impression that there are lots
Yeah.
of manipulations going on in the market. So we need to see more of this. We need the regulators need to be transparent as to what particular infractions were done, so that people know. And so there's that reputational risk that CMOs will not want to be involved in, and then it will take some time. Once we see this applied over a period of time, then we will see increased pricing of integrity into our market.
Andrew, I know we are not privy to how they arrived at those fines. And some might ask if they are being sanctioned for taking a stock by over 800%, whether this 50 million naira is sufficient and appropriate for the offense, and whether it should be something higher or whether this is excessive. What do you make of that?
Well, the regulators, that's
NGX?
NGX Retco, they do
Mhm.
have their procedures, and their processes for handling infractions in the market. And I think the fines that were imposed were in line with their procedures. They
Okay.
are specific fines for specific, there are penalties,
Fractions.
so to
Yeah.
say. So, yeah, so I'm not privy to what those how those fines were, how they came to those particular amounts for the respected parties. But I don't think they were. I don't think they were too low. I don't think they were low. I don't think they were too high. I just think they were just appropriate for what the regulators wanted to achieve.
Okay. So you think this is enough deterrence going forward?
Yes, I mean, one of the companies will find 91 million naira
Yes.
for a capital market operator, a stockbroking firm, to report 91 million naira in profits. You're looking at if we take an average of 1%, for brokerage fees, you're looking at a 9 billion naira transaction, yeah, or
Mm.
900 million naira. It's a lot. So that's a lot of money for a brokerage firm to use.
But not if when you have participated in driving up a stock by over 800%, you might have benefited as a company. from that as well. So, I mean,
Yeah.
we allow our viewers to
But
to make,
okay. Okay.
yeah, we allow
Yeah.
our viewers to let us know what they think about these fines, whether they think it's sufficient, whether they think it's excessive. But I think one thing is sure: if we want a market where people will have confidence, and we must take market integrity. In fact, we must be able to take it for granted and say, no, this
Mm,
doesn't happen in our market. Okay.
yeah.
Yeah, Andrew, over the week as well, the federal government did announce this $6 billion external borrowing. So the Senate hurriedly approved the federal government 6 billion loan request. It's involving the United Arab Emirates Dubai banking channel. So if this goes ahead, it's going to push the total debt stock over 155 trillion, 455 trillion naira. So the request was read and passed in a record time in the Senate. Now, my question is this a fresh borrowing? Because I think people would like to know, viewers like to know, is this a fresh borrowing, and how concerned should investors be about debt sustainability, the debt trajectory versus the growth that this might fund?
Okay. From the details that we have in the public, it is a fresh borrowing because along with the request for approval from the National Assembly was also the request to increase the budget by about 9 billion naira, which is the naira equivalent of the the uh, the $6 billion. So, from information that we have, that is fresh borrowing that was not previously factored in
No,
the
sorry,
earlier
did you
budget.
say $9 billion or 9 billion naira?
9 billion naira.
Yeah, then it's not going to, I mean, we're talking about $6 billion now. This is $6 billion.
Yes.
Okay, so this is probably you're looking at about 900 billion,
No,
maybe about 900 billion naira.
okay, I think I have the numbers wrong, but from the information that we have, it is fresh borrowing from the it's not one that was plugged with the medium term expenditure framework for the 2026
So this
budget.
this wasn't captured in the 2026 budget, because my thinking is that
Yeah.
we have plans to borrow using euro bonds. So my thinking or my sense was that this was going to be that external borrowing instead of going for euro bonds.
Um, so whether with the funding was going to come through the issue of instruments or multilateral borrowing, I think from the information that we have, the fillers that came with this particular request, that it's a fresh borrowing,
Okay.
from the international market. But I think the issue really is well that it passed the National Assembly in record time was expected because the
Okay.
ruling party dominates both chambers. Although we expect to see increased scrutiny, but it is what it is. So for the size is not really the question. It is the
Okay.
deployment of it. So I think the major concern is how this funding will be deployed. You know, if it's deployed to infrastructure projects and FX generating projects, that will be good. It is positive, it's accretive, you know, for us. But if it is to plug deficits, the deficit budget, and in terms of consumption, and that is where there is a concern, about its sustainability going forward. But so the borrowing is not the problem; it's the deployment of the funding that is really the concern for us.
Do you see this having any impact on, naira stability since we're borrowing $6 billion?
And again, it's still the same thing. It is the what the funding will be used for. If it's
Okay.
used for FX generating projects, then it helps our position. It
Naira
improves our
stability.
capital stock and then FX position as well. So it's the deployment that really matters.
Okay, awesome. So, Andrew, let's begin to coast home now. So, with the all share index up massively year to date, we're seeing signs of some wobbles along the line. Yields in the fixed income market is still elevated. So, is the playbook still buy the dip in quality names, even as banks begin to come up with their earnings, or should they be watching the fixed income market for treasury bills, bonds, or commercial papers?
Okay, I think it's not an either or, it's a mix of both.
Okay.
With the current high yields in the fixed income market, investors can look to take advantage of that in the short term, and
Mm-hmm.
then for the long term play in the equities market, we're looking at um, companies that have paid dividends consistently. We look at the tier one banks, with the increased capital they have to deploy, we expect greater value creation from there. The industrials as well, the likes of I would say Dangote Cement, um, given that the increased infrastructure spend that we have and the position of the company to take advantage of that, and other players in that particular space as well, the likes of Wakwan, Boa Cement, and then of course the oil and gas sector, given
Yeah.
where international crude oil prices are. So for the short term, investors can look to take advantage of the high yields we have in the um, in
Fixed
the
income
fixed
space.
income space. Yeah. And then for the medium to long term, like you said, buy quality names in key sectors like banking, industrials, and oil and gas.
What about commercial papers? I hear a lot of commercial papers are out there as well, printing or, I mean, yields about 20% and above. What do you make of
Yeah,
that?
yeah. Yeah, so that would come into the category of fixed income money
Okay.
market investment. Just investors should just be particular about the quality and the names that they're investing in, with yields as high as 24%. In the CP space, it's just um, do well by good names. By picking good names, and investors should be fine. So just take advantage of both markets at different handles.
Okay. Yeah. Take advantage of the markets. We've seen promising signs or promising signals from the banking sector led by GT, Guaranty Trust Bank, earlier in the week. So we expect more banks to begin to churn out their results and then reward shareholders for sticking with them. So we will cover that and then bring you all the updates that we have in our next edition. So, Andrew, it's really a pleasure speaking with you with your insightful, detailed, and comprehensive, thoughtful presentations all the time. It's always a pleasure, Andrew.
Thank you. Thank you, Dr. Bello. Thank you.
All right. And thank you everyone for joining us today. Again, we are here every weekend. Please like this video on your way out. If you are new to this channel, please hit the subscribe button, click on the notification bell so that you can always be notified. Also, share this video with your community. We are here trying to help everyone achieve a wealthy and a prosperous 2026. Until I come again, your way next time. Take care, everyone. Bye, and we are out.